Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, March the 7th, about 10 minutes after market close here in Jacksonville, Florida, 4:08 p.m. Eastern time to be exact. And today's video is actually a special edition video, the H pattern edition of the Daily Market Insight video. And we're going to look at what this H pattern is. And it is just a technical pattern that resembles a lowercase h. And we've seen that occur several times this year so far on the Qs. And we're going to look at that as the main example, but we've also seen it on the S&P and the total stock market index. So we're going to look at this H pattern. Additionally, we're going to look at some of the top performing stocks and some of the worst performing stocks and sectors of the day. We had a small trend gauge change and just a pretty important day all around. So let's go ahead and get into the action of what happened, right? Wild overnight session, meaning a really nasty gap down right out of the gate when the futures opened yesterday evening. That led to a incredible recovery pre-market this morning as we opened up nearly green on the S&P after being down roughly 2% after hours yesterday. But nonetheless, it led to a really poor day in the markets, aka all day selling, as you see here. And that just means there was really no reprieve. There wasn't much of a bounce. It was dominated by bears, dominated by sellers today. So performance-wise, G6 down nearly 4%, S&P down 3%, Qs down 3.7%. Dow down 2.4, mid caps, which had been showing some relative strength this year, losing that mojo today, down nearly 4% as well. Russell 2000 down 2.5, only down 2.5 because oil was actually helping the Russell a little bit here. 60-40 down 2.09%, and Grotection slightly green today, up 0.19%. So market state no longer rally with today's action, pretty clear distribution back almost to those 224 lows, but going back to the 124 lows area and below on the indices here. So market state is now correction. And additionally, moving to the trend gauge here, we have moved market leaders from neutral to bearish. A lot of things that look like they were okay, or charts that look like they were trying to hang in there and show some relative strength, really busting open to the downside today, regardless of what sector it may be in. So some nasty moves across all sectors today and some stocks, and then no changes here on the short, medium, or long term as those remain in the bearish downtrend segment here or category here. So before we get to the charts and before we get to the tail of the tape, as I always do, let me briefly highlight myself here in the middle and my email. If you have any questions regarding this video, regarding the H pattern that I'm about to talk about here, whatever it is, just send me an email and I'll happily answer any questions. Or if you're interested in what we do, what our approach is, what our strategy is, you can email me or anybody on this page, Dan, Tim, Merrill, or Don at revereasset.com. So let's get to the tail of the tape first, and then we will get into the charts a little bit more here. So market state correction, we already addressed that. Headwinds, those remain the same. US dollar, inflation, Fed taper, interest rates, Russia, Ukraine, none of that is going away, at least not in the near term. Those are going to be problems that are going to continue to hang over the head of the market. Sentiment, we did get a big move up on the VIX, moving up to the 36 area, up about 13% for the day, which really not a massive move given that we saw the indices really get hit hard today. But nonetheless, the VIX pressing its recent highs, or at least moving up in that direction, up pretty big today. Not really much movement from the put calls, still stuck around this 0.9 area, but fear, greed, now down to a 13, continuing to show extreme fear. That is a very low reading. It doesn't go below 10 extremely often, and we're very close to doing that now. You can see the bull case, initiate rally. We had that done on 224, but as of today, that rally fails. We did not reclaim the key moving averages, and we have been rejected, as you can see on the right-hand side of your screen. This is the S&P 500 here. So rejected, nasty move back down here. The rally has failed. News-wise, we had discussion on stoppage of buying Russian oil. Oil then overnight gaps up to 130, and then this morning had reversed off of it. So we had a very parabolic, huge move up in oil while we had the markets gapping down in the overnight session. What we were watching today was what would the S&P do when it ran up into this 4290 area, the bottom of this congestion slash 124, 128 shakeout area, which also corresponds to this 4300 area, which was a really big level of interest. And the answer to the question is it pretty much got rejected very quickly. As you can see, failed badly, may flip to resistance. And certainly that looks like the case for the time being. Action-wise, we're going to flip to an intraday chart here in a second while we talk about this. But we opened just slightly down on the S&P, trended down below that key 4290 level, and then selling just continued into the end of the day. Like I said, all day selling going on. Excuse me. And I'm going to quickly pull this up. If I can get this off of the screen here. Sorry about that. Let's just, I'm not really sure what's going on. Let's do that. There we go. Okay, so let's go to an intraday chart quickly here on the S&P, and you can see what I mean by all day selling. I want to show you kind of what I mean. We were briefly above this 4290, 4300 area, but not for very long. Pretty quickly, we moved down and continue to move down for the duration of the day. So this is what I mean by all day selling. Not much of a reprieve. We went sideways here for about an hour during lunch and then went straight back down into the close. So just a little bit of an intraday chart there to associate with the action that I'm describing to you. Now let's pull the tail of the tape back up quickly. Like we said, we opened, or some notes, excuse me, overnight low was 42.41. Obviously, we finished below that, rallied to nearly green at the open, and then a harsh trend down. Bottom line, bears firmly in charge, SPX or the S&P at a 9-month closing low. This is not great action following the 224 bounce. It looks like we're seeing the same pattern, that H pattern that I'm about to go into detail on here, take place again. Performance-wise, we went over this, but we'll touch on it quickly. Open flat, closed down 3%, G6 down 4%, 60-40 down 2%, Grotection slightly green, up 0.2% on the day. Beta stays the same at 0.07, no trades today. Sector-wise, OIH, that's your oil and gas field services, very strong. Solar, defense stocks, utilities, gold and gold miners, also strong. Weak on the sector side, we had communications, technology, discretionary, software, reopening, banks, builders, and semiconductors, very, very weak today. Sorry about that. And moving on here to key levels, we don't have to spend a ton of time on this here. You can see the key moving averages continue to decline, as in the 21 and the 50. And like we already mentioned here, we closed at 42.01 today. We were watching to see what would happen up against the bottom of this area here, this 42.90 area, which is roughly where we were shot down and rejected today on the S&P. So let's get into the charts here, and I'm going to get this out of the way. I already touched on the S&P, but we're going to look at it here first. So we're going to start with the S&P, and then we're going to move on to the Qs and talk about this H pattern in a little bit more detail. So as you can see here, we rallied up into the 21, and it looks like we are going to be rejected and coming back down. Really key spot for the S&P is this 4,200 level. Obviously, we closed right there today. But if you lose this 4,200 level, in my opinion, it is highly likely that you're going to go and see these lows here around 4,100, at least pay them a visit, if not go lower from that point. But today, certainly not the action you want to see. Certainly looks like distribution. Now, let's talk about the H pattern here for just a moment, and then I'm going to move forward and go through these stocks. But this H pattern is characterized by a steep drop down, as you can see here, if you'll follow my cursor. So a steep drop down, and then subsequently a rounded off attempt to go higher that fails without making it back to where the drop started from. So we'll go from here on 113. You have a steep drop on the Qs. We go from roughly 380 to 330 here. And then we get this rounded off attempt to go higher. We come back up to right around 370, and we can't ultimately make it higher, and that leads to this H pattern taking place. As you can see, if you follow my cursor, you see what this H pattern looks like. And so now we have a very similar pattern taking shape. So we have a precipitous drop, call it from this point here, from 216 on the Qs, we go from 350-ish down to 318 here in a short period of time. We rally up, round off and fail at the moving averages, aren't quite able to get back up to where we were, and now it looks like we are heading lower. So as you can see, it looks like we're just reliving that H pattern again and again here since the selling started. And I'm going to show you BTI, which is the total stock market index, and it looks very similar. So you can see here the initial drop down, the attempt to come back up that doesn't quite get back to where we were, that goes shorter, and then the same thing happening here on a little bit more accelerated time frame here over the last week and a half or two. So I just wanted to point out this H pattern, what it looked like and what it was characterized by. And because it's something that we've mentioned between myself, Don, and Alex, but we haven't talked about much on the videos, and you can see taking place here on DIA, even though it looks a little bit different. But DIA, same story. This 330 level was kind of the spot, if you will, the lows from 124 corresponding to the lows from these days in here, and lost that level today, very similar to what you see with the S&P and the QQQ. IWM, Russell 2000, losing the key 2000 level, which corresponds to this 200 level for IWM. So not what you want to see there, back below the key moving averages as well. And mid caps, like I mentioned, had been showing some relative strength, but that line rolling over a bit today, showing relative weakness versus the market as opposed to relative strength, in danger of getting below their 224 lows, only a little less than 1% away from that. So there's your indices. Now let's roll into some stocks, and we'll go quickly through the positive ones and more to the negative ones, because there's a lot more negative than positive today, and a lot of these names we've talked about in exhaustion. So the chemical and agriculture group, strong again today. This is getting very parabolic in the nature of its move, but this chem ag space showing big time relative strength versus the market. So CF, NTR, Mosaic, we've talked about those names a lot. We also saw solar show some signs of life today. Relative strength versus the market after this big pop, pulled back into the moving averages and showing some decent action, some relative strength, even though it closed at the bottom of the range, still up 3% versus the S&P being down 3%. So a little bit of life coming into solar. We'll see if it ends up being short-lived or not. Defense stocks, we also saw these be strong. Well, excuse me, that is an ETF. Let me show you two names here. Lockheed Martin up 2%, LHX, excuse me, up about 1.5% here, and NOC, another name that was up about 1.5 or 2%, excuse me. So not all defense names very strong, as you can see by the ETF, but there were some names in the group, your pure defense plays, acting pretty well today. Additionally, obviously, oil, I mentioned, had a huge gap up. A lot of those stocks ended up pulling way back off their highs, but we did see the oil and gas services ETF lead today, and our only position, HAL, also acting like a leader today. So this was the strongest and hottest component of the oil world today. Some of the other areas of oil not so strong today, a lot of them down actually, but Exxon very strong as well. As you can see here, gold continues to act pretty well, up about 1.5% going out at the top of the range. And then lastly, on a sector basis, XLU, the big bright spot, up 1.5%, pretty vertical as well the last couple of days for a ETF here. Moving on to the bad, and there's quite a lot of it. A lot of really nasty moves down, a lot of uncharacteristically volatile moves down, and I'll just start running through these here so you can kind of see what I mean. FTNT, this is a cybersecurity company that got a huge boost here, as you can see, when this Russia-Ukraine stuff started coming out, down almost 14% today, after looking like it was possibly setting up off the 8-day here. Just really, really brutal, nasty action on above average volume here on FTNT. American Express, a big staple name, a huge company, $120 billion company. Looked like it maybe was finding support off the 200, down another 8% today. Amazon down about 6% today after already selling off a couple of days prior. I'm just going to keep rolling through these. Nvidia down 7% today, breaking back below the 200. Not a good look here for Nvidia or AMD, which is back near 100. As Don mentioned, the reopening stuff really having a tough day. This is the airline ETF. This is the Jets ETF, down 12%. today, as you can see here. Just absolutely nasty, nasty action in a lot of the airlines and cruise lines. Blackstone, a financial asset manager company, down 10% here today. BTU, a coal company, had some issues, some news come out, but nonetheless, just I'm highlighting the volatility here of a lot of these stocks, regardless of the sector, as well as some of these commodities, extremely volatile as well. Speaking of commodities, STLD, a steel company, down about 7% today. FCX, a copper company, which had been acting really well and still is, the chart still looks fine, down 6% today. But just speaking to the volatility we saw in the markets. And then like Don said, or like we talked about on the tail of the tape, stocks very weak today, as you can see breaking down there. Builders, ITB, down about 5% today. And consumer discretionary, those are three of the worst performing sectors of the day. So that is going to wrap up the video, everybody. I hope you enjoyed it. If you have any questions about that H pattern, if you want me to characterize it in a little bit more detail, whatever the case may be, let me know. But hopefully you guys enjoyed the video. I'll see you on Thursday's video and the podcast. So have a great week, everybody.